Hi guys, welcome to another live trading video by Optionables. My name is Saket and in this video we are going to review the trades taken on 12th of July 2021. So today we had a big loss, a loss of somewhere close to 1.8 lakh. But this was pretty much on the expected lines because we had a winning streak for somewhere close to 7 to 8 days previously. So this didn't actually come as a surprise. So today what happened, market was consolidating throughout the day and we had a profit of somewhere close to 80 to 90,000. Suddenly within 2 minutes, the market crashed and we went to a loss of 3 lakh. We didn't have time to adjust, we didn't have time to do anything at all, right? So then once we reached 3 lakh, so obviously when there's sudden crash, the IV would have gone up. And on the other side, we also hit our risk limit of 1%. So you usually know that we don't usually risk more than 1 to 2% of our trade. So since the IV had spiked up, so what we thought, we will give room for 1 more lakh. So till 4 lakh we will give some room, let the IV cool down, we might actually end up recovering some amount. This was the idea what we had, and from 3 lakh we risked 1 more lakh. But what you have to note here is even this 4 lakh is within our risk limit. So this is still within our risk limit of 2%. We are not exceeding that. So the idea was the moment it hits 4 lakh, we are going to exit all the trades and close it for the day. But the thing is, luckily we were able to recover some amount and we ended with a net loss of 1.8 lakh. So today there is a lot of things to learn and I'm going to brief you what it is. First important thing is about risk management and position sizing. Always have a proper risk framework of where you want to cut off your loss. We don't recommend to hold on to your trades if it is losing over 1 to 2% of the capital. And the second one is about position sizing. So when you don't have the right position sizing, that's when you're going to end up in all such situations. So today, let's say I had gone 3 times higher quantity. It's not that there is no margin to go. The thing is, there is no need to go. So I can shoot 15,000 quantity in one shot, morning itself. Why do I have to wait till the afternoon, right? So that is not required. If I had gone 15,000 quantity, my M2M would be negative 60 lakh. And at that time, I won't know what to do because I will be emotionally involved and I won't know what exactly to do or how exactly to react at a 60 lakh loss. But if it is a 3 lakh loss, that's quite okay because if not today, in another 2-3 days, you will recover that and you will move on. So that's the reason having right position size won't actually affect you emotionally and you will be making better decisions with that. So this is what we get to learn from today's trade and I also hope you enjoy today's trade review. So apart from that, if you are liking the content on this channel, please do hit the like button, share and subscribe. You can also check out our free course on our website using the code OPTION100 for the option course as well as Optionables100 for your equity course. So you can avail both of them for free on our website. So do check that out. Please do hit the like button, share and subscribe. Thank you so much for joining guys and I also hope you like the trade review. See you soon in the next video. Hi guys, welcome to another video by Optionables. So today was a very wild ride and we ended with a loss of close to 1.8 lakh and I'm going to explain what exactly happened, right? So as usual, you know that we usually go 3 to 4 entries and morning as usual around 9:30, we ended up creating a short strangle at 35,300 as well as 35,400. So 35,400 calls as well as 35,300 puts. So this was the first trade which we took, right? So this is a pretty simple trade. And later, as the market headed up towards 10 o'clock, what we did was we entered 35,400 calls as well as puts. So this is the second trade. First trade is the strangle. Second one is the 35,400 straddle. So both CE and PE we had shorted. So then what happened? There was some brilliant decay throughout the day and at this point, so we had entered 1 o'clock trade also. 1 o'clock also we entered 35,500 calls as well as puts, right? So we were in a very good position till 1 o'clock. And at 1 o'clock, we had a profit of somewhere close to 80 to 90k positive, and we were sitting in a very comfortable position. This is when the fun part comes. Within 2 minutes, before you could realize, you dropped from 80k right towards negative 300k. So it was just in a fraction of a minute which you dropped. And the thing is, all your put stop losses got triggered except for one. And this is one of the disadvantage of keeping a very high stop loss. As you know that we have kept the stop loss at 75%, not like the usual 30% which we keep. And in accounts with the 30% stop loss, there we ended with a very good profit, because the stop loss would have got triggered and then the CE leg would have given some very good DK. But in the main account, we had kept 75% stop loss, so there was no way we would go into profits. So right after this fall came, we entered into a 3 lakh rupee loss. So now the question was, I had lot of call legs open. In Nifty I had call legs open, in BankNifty I had call legs open. Only one stop loss of PE hadn't triggered, right? So I had only 500 quantity of BankNifty PE which hadn't triggered, whereas I'll just clear this and write it down. So we had 500 quantity of PE which hadn't triggered the stop loss, and we had 2000 quantity of CE short, as well as we had 4950 quantity of Nifty CE short. So these were the quantities we had. And the thing is, since we had already touched 3 lakh, so the thing is, as soon as it touched 3 lakh, it didn't even give us a opportunity to exit. Otherwise, obviously, we wouldn't have let the loss run till 3 lakh. We usually try to cut off at 1.5 lakh and then try to take the other trade. So that's the reason in the morning itself, we usually don't go very high quantity. So what will end up happening is, when such move comes, imagine instead of having 2000 quantity, I had 10,000 quantity. My loss would be 5x of the same amount. It wouldn't be 3 lakh, it would be 15 lakh. So that's the reason gradually we start increasing the quantity, and we don't go right away into 15,000 quantity or 10,000 quantity. Only towards the end, we start adding extra quantity. So when this fall came, obviously the IV would have increased, and we were at a loss of close to 3 lakh rupees. And IV would have obviously shot up because there was such a big dip in such a small amount of time. And the thing is, what I thought now, so we have already gone into loss. So I was just trying to figure out what exactly happened, and there was a big fall in the market. So what was our mindset now? The thing is, one very important thing is, if you have small quantity size and if your loss is well within your limit, 3 lakh is just 1%. And I'm quite okay with losing 1 to 2% in a single trade. And we have told that before also, we usually don't let it go over 2%. So the loss was just 1%, and I was okay with holding that. So this didn't affect us quite a lot, because once you take a hit on your emotion, that is when you start getting involved emotionally, that's when you start to take hasty decisions, right? We were quite okay with 3 lakh loss. So it was not huge. It was just 1% of the capital. And that's the reason, okay, we thought we will give some room for IV to cool down, because now the IV is very high. So maybe once the IV starts to cool down, and if the market actually tends to go down, then we are going to recover most of our losses. So we will just give a room till 4 lakh. So the moment we reach 4 lakh, we will just cut down. So there is no need to think twice. So whether what happens later on is just secondary. The moment we touch 4 lakh, we will just cut it down. 4 lakh is 1.3% of the capital. So till we reach 4 lakh, so we will just give it some room for the markets to cool down, IV to cool down. And in case if market actually tends to continue the move in the same direction, then we are going to get back some amount of what we have lost. So this was the plan, and it was pretty okay because the quantity size is not high, first one. And the second reason being, this loss is well within the limit. So it's like you having around 3 lakh and losing just around somewhere close to 3,000 rupees. So the risk limit which we were working with was 2%. So we wouldn't let it go over 2%. And the idea was, once it hits 4 lakh, we are exiting everything for the day. So there is no more additional trade because we have already shot up our risk little higher. So no more additional trade. We are just going to cut everything and close the trade for the day. So that's absolutely okay because you have gained for straight 7 sessions, and how long do you expect to gain continuously? So this was more or less on the expected lines, and there was nothing surprising in this at all. And we were just waiting for our M2M to hit 4 lakh to square off everything. And we didn't take any counter trades, nothing. So our only aim was, if it reaches 4 lakh, we are just going to square it off. Otherwise, we are just going to hold on to the trade. So that was the only this thing. So we didn't do any sort of adjustment. If the move was more gradual, so then we would have done some shifting, and after it hits the stop loss, we would have taken a counter. But it had already come closer to our risk limit, and that's the reason we didn't do any adjustment, because it will just complicate the position more, right? Then what happened? Even though the market bounced back, so no counter trade was taken. Even though the market bounced back, the M2M didn't actually increase. That is because the IV decreased. So actually, we giving some room actually helped us, because the M2M didn't actually increase even though the market bounced back. And then gradually it started coming down. We went from negative 3 lakh to almost 1.2 lakh negative. So we recovered most of the losses as the market started coming down. So here we could have done a better decision. Here we could have taken slightly better decision. What we ended up doing was, we expected, so I'll just push this little down. So what ended up happening was, here at 1.2 lakh loss, we could have just exited and booked everything. So because recovering 1.2 lakh wouldn't have been a really hard task. But we just let it be, because the markets were crashing down and we didn't expect a bounce back. But unfortunately, that's what exactly happened. And as the market bounced back up, our loss went to 2.1 lakh again. But this time we were very strict. So it was no longer 4 lakh. The moment we hit around 2.5 lakh, we are cutting off all the trade. So this means now our risk is well within 1% also. We won't be even losing 1%. The moment it hits 2.5 lakh, we are just going to cut down all the trades, and we are not going to hold any trades. So this was the plan now. So we had decreased our risk from 4 lakh to 2.5 lakh. And the thing is, later we started adding some additional trades at 3 o'clock. And finally, this 2.1 lakh ended up at 1.78 lakh. So we were able to recover around 30,000 towards the end. And overall, we ended with a negative 1.78 lakh loss. So this is the recording of the trade. And you can see that initially we have entered Nifty as well as BankNifty, the first short strangle which I spoke about. And I will just try to forward this soon, so you will get a better idea. So just keep following the time on the top. Here you can see 10:01 AM, right? And I have also taken the short straddle at 35,400, as I mentioned to you earlier. And we also have Nifty short strangle. So we have 15,750 PE as well as 15,800 CE. So just keep following two things. One, the time on the top, as well as M2M. So I am going to take you to the crucial point. Till then, I'm just going to play this at a fast forward. So now we reach 10:30 and our M2M is around 50,000. I haven't adjusted any position. I do nothing. Now I reach around 11:15 and you can see that all the 5 legs are in profit. All my 5 legs are in profit and we have an M2M of 63,000. So I'll just move little ahead quicker. At this time, 1 PM, our M2M is 92,000 and I have already added some extra trades. Our M2M is 92,000 rupees and now what happens is the fall comes, and this is where I want to show you. Just keep an eye on M2M. Just keep an eye here of what exactly happens to this M2M. So first you can see that there's an initial quick drop towards 8,000 rupees and within next 2 ticks, right? Even I was not seeing the markets. Within next 2 ticks, you reach negative 3 lakh. So it was just matter of 2 ticks. You went to 3,35,000. And I was just trying to figure out what exactly happened first. Immediately, I click on square off button and I keep this ready. The moment it touches 4 lakh, I just wanted to square off everything. That's the reason I keep this confirmation window ready with all selected and square off pressed. The moment it touches 4 lakh, I just wanted to exit everything. So because we will get to think later on, we'll get some time to think later on and take other decisions. Only thing is, you should make sure that you don't let your big losses running. So you can see that it's 1:35 now. So 20 minutes, I'm just holding this. I haven't exited this window because the moment it hits 4 lakh, I just want to press on square off. So now it's almost 1:45. For almost 30 minutes, I am holding this window open. And as I move forward, it's around 2:05 now, which means 1 hour I have kept this window as it is. I haven't touched this at all because I'm looking at the screen, and the moment it touches 4 lakh, I just want to exit. And you can see that I haven't done any adjustment, no counter trade, nothing. Because my only focus was to cut down my loss because it has already reached the risk limit of 1%, right? So 1 to 2% is what we try to cut off at. So it has already reached that limit. So that's the reason I'm holding it. So then finally, it's around 2:17. So which means it's over 1 hour since we the stop loss got triggered and our M2M is recovering. Still, I am having this window open. It's just a click of the button and I'm going to square off all the positions. And finally, after some time, I finally remove this window once we fall below 2 lakh. Because now it's around 2:40 and I finally get rid of that window. Till then, I was holding that as it is to square off as quick as possible. And now we slowly start recovering. So at this point, we also go to 1,20,000 as I mentioned. And later what happens, the market starts bouncing back and our loss is now going to come back to around 2 lakh. So it comes to 2,20,000 and I start entering other positions, the 3 o'clock trade positions. And the idea was the moment it reaches 2,50,000, I'm going to square off all. So that was the idea we were trading with. And luckily that didn't happen. Otherwise I would have squared off at 2,50,000. So you can see here, we are at 2,34,000, 2,28,000, 2,14,000. I square off a bit and then finally this is at 323. I end up squaring off everything around 324. So you can see my net quantity is 0 and I end with a negative 1,79,847. So totally we booked a loss of 1,80,000 today. So it was a pretty wild ride, but it was as expected because you had profits for many days now. And one such loss day is expected. And this is one disadvantage of keeping a higher stop loss of 75%. If it was a 30% stop loss day, then you would have definitely ended in profits. So that was for the trade today. And I'm quickly going to fill the Excel sheet as well. What are the lessons we get to learn from here? One, when you have proper position sizing and risk management, you actually won't get tensed. You don't end up taking hasty decisions because if you don't have the right position sizing, that's when your loss exceeds a particular limit. I would have reacted completely differently if the loss had crossed over 10 lakh. I wouldn't know what to do. But loss was 3 lakh, which I was pretty comfortable. I know that even if I lose today, in another 2-3 days, I'll be recovering this loss. So it is not a pretty big deal. So that's the reason, even though you earn less, it's absolutely fine. Don't increase your position size. And that's the reason we say, even though you can do a short straddle for 60,000, make sure that you use 2.5 lakh per lot. So that should be your size of the position. So for every 2.5 lakh you have, you go 1 lot. Similarly, for positional trades, every 7.5 lakh you have, go 1 lot. Even though you can do it for 60,000, follow a proper position sizing and it will keep you in a very comfortable position. So coming to the Excel sheet, we will have to assume little higher brokerage as we had discussed earlier. So I'm going to put negative 1,80,000 and I'm going to put 17,500 as brokerage. So with that, our P&L falls to 4,53,000 and it is on the expected lines itself because we had quite a good profitable streak continuously and it is not a big thing to lose one day. And we still have 1.5% to be achieved and we will see how this month goes for us. So that's for the today's trading video, guys. I hope you got to learn something from this. And if you have liked the video, please do hit the like button, share as well as subscribe. Thank you so much for joining, and I'll see you soon in the next video. And by the way, this Friday we will again be going live, and you can also join us live. And if you haven't checked out the course, you can definitely do that. So if you go to courses.optionables.in, there you have a course on fundamentals of options as well as investing. So you can avail both of them for free for limited time. So do check that out, and I'll be seeing you soon in the next video. Thank you so much for joining.